Welcome to another Ronel Talks Money show. Now, today we are again going to discuss one of my favorite topics, and that is all about investing in property. But before we get there, I just want to invite you again, go to the link in the description below where you can sign up for our competition, some free giveaways where you can also win one of my books, Financially Fit and Wealthy. So please go subscribe to the channel and also enter our competition. Now, today, like I said, we will talk a lot about investing in properties. What's all the things you need to know if you want to start investing, or if you are already have investment experience, but you maybe want to expand your portfolio and you want to get new ideas. And with investing in property, you can never have enough knowledge, and it's always good to learn from other people who have done it before. They've made the mistakes and you can just learn from them. Now, today we have a seasoned property investment expert with us, Michael Bowen. Now, he will introduce himself now, but I can just say that he is a seasoned expert in cash flow positive real estate investing, a property professional, an energizing businessman, and an inspirational speaker and coach. So, Michael, welcome and thank you for joining us today.
Ronel, thank you so much. I loved your introduction there, and I love the fact that you mentioned the mistakes. I think I just want to open up with that is my very first mistake in property cost me 14,000 euros. That was 17 years ago. That's 300,000 Rand in today's money. And I'm not ashamed to ever share it. I share it with a lot of people because I think the mistakes are the best learning lessons in life. But thank you very much for having me on.
Okay, no, it's a pleasure. And like you said, it's kind of, you can have that failure, if you can call it that, and you can either run away from it completely and never do it again, or you can learn from it and you can really just next time you make a better and a more informed decision. So, Michael, maybe we should kick off and you can maybe just tell us a little bit more about yourself and exactly where did this interest in property originate from?
Indeed, I think like many people who are going to be watching this, I started off, it's 17, 18 years ago now, and it was a desire within me to want more. And I think a lot of people can relate to that. More money, more wealth, more. I wanted to travel. I wanted to go to Fiji. I wanted to have a better car. I wanted to have a motorbike, and whatever it is you want. So that was kind of what spurred me on and to getting started in property. And it just kind of grew from that. It started with one idea of going, well, if I can just, flip one property or fix and flip one property, then over time, surely I'll create more wealth and buy more things and cover more debt and just live life more, which I think a lot of us want. I wanted a nicer house in a nicer area and a probably more secure area, if I can put it differently now. And that's kind of where I started. It was just purely with a dream of wanting more, going out there and seeing it. Like I say, it was 17, 18 years ago now I've been doing this. Personally, from a personal perspective, I love all things water. So I'm a whitewater kayaker, I'm a diver, I do bodyboarding, I live in the Western Cape now. So it's a great place to be, apart from the fact that the water is slightly chilly. But that's okay, we can forgive that. And yeah, that's kind of basically me and how I got started in property. And I think a lot of people resonate with that. Is people always want to have that little bit more to get a little bit better in life. And there's nothing wrong with reaching out for more and wanting more.
Yeah, and I think it is that, a lot of people, they have those kind of big dreams, but it's literally about what action steps are you taking to realize those dreams, because you can have those dreams, but if you're not going to actively do something about it, it will just never happen. But I think like one of the things that you obviously did, or part of your journey, was when you founded ZAHomes. Is that how you pronounce it?
Yes, ZAHomes. So ZA being the kind of international symbol for South Africa. You can look on all our password, it's ZA. My currency is ZAR, and it became ZAHomes. And it started with me, but it grew beyond that. And I've actually changed from being a property investor now to more, it started with property investing, then I became a business investor, and now I'm a people investor. And it's kind of weird how that grew, because ZAHomes grew from that. I kind of not lost the, gained a bigger passion for starting businesses. And then as I did that, I gained a bigger passion for working with people and helping other people out. And that's how it kind of just grew and took off. So the partnerships now we have is all over South Africa, and just ZAHomes is one of those partnerships I have with numerous people for various skill sets that I just partner with, and I love it. I love investing with people. It gives me so much more thrill to see what comes out of it.
But tell us a little bit more about the concept. What exactly do you do?
So ZAHomes, from what we're talking about today, it works with investors, and we work with investors and banks to buy property. We buy cash flow positive property, and we buy equity positive property. And we give investors great returns, somewhere between about 10 and 15% over an annum. Depends on whether they want to come and earn and learn with us. So a lot of people want to start this themselves. A lot of people have this dream of actually starting their own either side hustle, business, and moving away from a 9 to 5 and recrafting what it is they want to have. And like a lot of us, when we were 20, we made decisions back then to go into a field of study, probably based on what our parents kind of said, if we're all honest. Or what society predicted we went into. And I kind of realized, well, actually, I want something different. A lot of people do. They kind of get into their 30s and 40s and go, well, no, I don't want to be doing that for the rest of my life. And so ZAHomes was born around that idea of going, how can we work with investors to teach them? And so we created an earn and learn where we'll actually pay them interest. So let's say they invest 100,000 with us and partner with us on that. We'll pay them 10% interest at the end of the year, and we'll take them through the entire process with us. So by the end, and we've got investors who've done that now. Sajida, who's a prime example, she went through that earn and learn. She's now starting her own property portfolio. It's just from 1 year with us. Other investors, like my dad, he's just put in his last amount of money, and his entire pension savings is now with us, invested into property. He was getting on average around 4.5 to 5.5, depends on the month and the year on the pension fund, which is just terrible for people that age. And he's now getting 15%. He's just sitting back. He's not, he doesn't want to learn all the stuff. He doesn't want the hassle of all that. He just wants the interest. So he's now getting 15% interest. And that's what we do for investors. We provide them an opportunity to come and invest for 15% or just come and learn. And that's, join us on that learning path. And we love to share. We love to teach, and we love to show people how to do this.
Yeah. And I think that's actually ideal for a lot of people who want to get, involved in property. But it's quite often you feel that I don't have enough knowledge. I don't know which area to buy in. I don't know, how to get tenants, how to manage tenants. I don't know all of those processes. And if you can almost be kind of almost shadowing somebody who has done it already, who kind of know a lot of the pitfalls, that definitely, I think, can help you so much to get to a much better position much quicker.
Indeed. And it's kind of weird. So one of the guys who we've now partnered with, he's now partnered up with us in PE Homes, and he's buying a property in Port Elizabeth. So we almost take a stand back when they're coming with us, and things will come up, challenges come up, and that's what people don't realize around property investing. There's a lot of challenges, and over the years, you know the answers. You get to know the answers. You've been through it a couple of times. We almost stood back and we wait with our investors to go, but geez, what's happening? And so it gives them that real life feeling of A, having the money on the line, B, going, well, what would I do? And then we go, well, actually, this is what we will do. And this is why we would do that. And so they actually get the real life experience, the real feeling within your heart of going, oh, what's happening here? Why is all that happening? And then, oh, okay, fine, this is what you do. And once you've been through it 2 or 3 times, you'll get to see that it's not as hard as what you think it is. The mindset is 80% of the problem in investing, and 20% is mechanics. And so, yes, coming and joining someone like us is a great thing. You earn money and you get to live it, live the actual things that are going on.
Okay. And before we step off ZO Homes, is there like a minimum investment requirement for people to get in, or how does that work?
So yeah, so we've got two different kinds of approach to people. We have a 100,000 Rand minimum limit. And so if we're looking for a property as we are right now in Bloemfontein, it's 500,000 Rand. So we say, okay, fine, we can either have one invested at 500,000 Rand or five at 100,000 Rand each. We are in process of setting up a stokvel, which will make it a lot more easier for people who can't afford the 100,000 Rand, who don't have that in savings. Mm-hmm. But the other investment type we do is people who've got surety potential. So, a lot of people are going, well, I can afford more from the bank and I'm not using it. Let's just say they've got a 2 million Rand mortgage affordability. We'll pay them, to give us their affordability through that entire time until we can actually let the business be self-sustaining. And it's a great way of seeing, how does a company form? How does a company take on property? How do you acquire the property? How do we find the property? And how do you manage the property? And they can invest with no money, but surety or mortgageability on it as well. Mm-hmm. So yes, that's 100,000 Rand minimum. But come in, hopefully by the end of this year, we'll have a stokvel, in which case we can take lower amounts.
Okay, that sounds awesome. But I know then you've also started AirStays. So tell us a little bit more about that as well.
So AirStays are for investors who've either got a Airbnb or want to start an Airbnb or a booking.com or an online kind of rent-to-rent model or rental model. But either I'm doing it and not necessarily sweating the asset as much as it can do. So we want to get increased revenue out of it, and we want to decrease the actual time involved in it. So AirStays comes in and is run by a remarkable lady out in Bloemfontein, a lady by the name of Melissa Killian. She is we use the Wealth Dynamics profiling system, and it's a great profiling system for how entrepreneurs like to make their money. Mm-hmm. And she's a Lord profile. So the Lord profiles are just Lord mechanic. They love to automate. They love to make it a process system. They love to make it repeatable. They love to go down to the finer details, so they can reduce their time in doing it, mm-hmm. but increase the actual money you get from it. So Airbnb essentially automate 90% of what you do in running an Airbnb. And to give an example of that, we're talking to Nick the other day around running his Airbnb. How much time a day, in an average week, do you spend now on your Airbnb? Because you've got to think about cleaners and restock take and broken and everything else like that. And so how many minutes a day, how many hours a day? He's down to 10 minutes a day. That's all he spends on his Airbnb. That means he's had clients check in, check out without even being aware of it. Cleaning services have come along. They've sent him videos on how to check in. All he's doing is basically just going, oh, was everything all right with your stay, or handling external kind of issues and challenges. But it's the occupancy. We've had our highest occupancy is 99%. Our average in that unit sits at around 87%. And that's because Airbnb and AirStays automate to such an extent that we get to be the highest. We get to be on the front page. In fact, if you go look at his property right now for the whole of Bloemfontein for a 1-bedroom unit, that property will show up. It's that high. We're getting to super host status, and the time involved, like I say, 10 minutes a day. He's getting on average last month, he got 5,000 Rand profit. That's not revenue, that's profit. 300,000 Rand unit. So that's good, great money with low time involved. And that's what AirStays does. It automates everything for you.
I like that. Michael, tell me, I think a question that you will probably get a lot. People would say, okay, but we've just been through a pandemic. The economy is struggling. In South Africa, we have a lot of political challenges. And I think that almost creates a certain sense of fear with people in terms of, should I invest in property? Because this is more longer term kind of thing. I cannot just kind of take my money from below my pillow and get on the first flight. You need to be committed more for the longer term. So people would probably ask you quite often, but is investing in property still a good option or a good investment solution? What would your response be?
So, and I found, and this is my own humble opinion on this, people are looking for reasons not to get involved. I think it's the wrong thing to look at. I look at the reasons of why we should get involved. Pandemic or not, we still need and want more in our life. And so we've got to take a risk. It's got to be a calculated risk, of course, but you've got to actually take the risk. So during a pandemic, do you invest into property? Absolutely. I think Robert Kiyosaki said it, and probably the guru for property investing, and Dolph DeRoos is one of his partners, said that never let a good pandemic go to waste, or a good recession go to waste. Getting property when nobody else is buying is a very good thing to do. And the only thing that I can probably give to say why it is a good thing is we bought a property. It's a 39 square meter property, and this is the one in Bloemfontein, on the outskirts of Bloemfontein, about 5 kilometers from town. It's in a huge block with a lot of other competition there, and we made 9,000 Rand before we took ownership on a 350,000 Rand purchase price. That was in level 3 lockdown. That was our first month revenue. When someone says to me, like, is a pandemic a bad time to buy property? I'm like, I don't know what you're talking about. My experience and what I see with us is opposite. And I was saying to you earlier, we pivoted because we understood during a pandemic there's certain people who have to travel. Doctors, nurses, policemen, political people, statesmen, the people who have to travel are still looking for a place. And so you have to get to the top of their mind and pivot your marketing to go, okay, you've got to travel. We've got a place for you that's close by that you can now come down to. And so you just got to understand the change in the dynamic that's happened during a pandemic rather than actually walk away from it.
Yeah, and I think like quite often, and that's why you say that you've pivoted, again, like if those kind of things happen, it actually creates another opportunity again. And it's quite often in kind of grabbing that opportunity where you are going to see awesome results. And I think like in touching on that, you've explained now to us how you feel about it, but I think also with Airbnb and multi-let student accommodation, I think there also people's immediate train of thought would almost be, but that kind of dynamics changed and people are working remotely. A lot more people no longer travel for business. Students may be studying like online now. Would these still be viable options? So what would your response be on that?
So it's based on perception, and unfortunately that perception is biased by what we watch on the news. And I remember during watching the pandemic and they were talking about student accommodations. Meanwhile, I've got friends of mine, investor friends, who were turning students away during level 5. Like they've got too many students lining up. In fact, January season is in student accommodation. That's the season that you start to take your intake in. And again, he was turning people away and having to reach out to our investment group and going, guys, does anybody else have student accommodation? I've got too many students. The world is growing. The students are growing. They're always going to be there. People are always going to need property. And so the perception out there by the media was that it was going to kill it. And the reality was people were still coming there because they still wanted to study and they still wanted to be there in person. And so it didn't actually materialize that. Well, I know some people it did materialize it. They lost their student accommodation and multi-lets. But my advice to people would be, don't necessarily listen to what the media is saying, what the media is hyping up, but rather to go and test the dynamics of it and see if it's a reality. And there's an easy way to test the dynamics. Go onto Gumtree and put an advert saying student accommodation available. You don't even have to have it, and just watch your leads come in. It's not going to happen now because this is the wrong time. And for anybody considering a student accommodation, they need to understand it's a very tricky thing. Multi-lets are tricky, and I wouldn't suggest anybody goes and starts on that. Start on a single let. That's a good cutting ground. But if you're going to move into a student accommodation, the season to buy is around August, September, because you've got to transfer for about 3 months and you want to be refurbing it and putting all the beds in for about a month or 2, and that'll bring you into January. Now you've entered the new season because now you want to get your students in. The last thing you want to do is buy in January and it comes to you in June because all the students have got their accommodation all of a sudden. That's the wrong time to buy. And so you also, again, we need to learn how to pivot. And it's something that a lot of people find tricky. They seem to go, well, we're in student accommodation. And we said, no, during December, well, actually December into the beginning of January period, on the second year, we need to pivot and put it into an Airbnb because the students have all left. They're coming back next year. We got the property, but now what are we going to do? Just leave it empty? No, we go into an Airbnb situation. We change our marketing tact. We advertise and we go, who would want to stay in a room in a student accommodation in Bloemfontein that would require that? And we figured out there's a lot of people coming back to visit their families. And they don't necessarily want to stay with their families or can't anymore because they're a bit conscious of going, well, I'm bringing my girlfriend or wife or whatever with me, and they'll stay there. And so again, you just need to go, what can we do to pivot? And we find, you Airbnb out that student accommodation quite quickly. So yeah, student accommodation is a very tricky one. It's a lot around your marketing, a lot around building up your student database. And again, you can do that on Gumtree and get it out there, but you've got multiple strategies that you need to consider over an average year. So don't start with student accommodation, please. Whatever you do, start with a single let.
Michael, I think that is good advice, and I totally agree with you, because I think with us owning a guest house, I think during the initial phase of lockdown, everybody said that your business traveling is dead. It's never going to get back to normal again. And for us, it was just kind of like just try to survive during that period. And now that it is coming back, it is actually coming back in leaps and bounds. And you also see now with so many big hotels and guest houses that actually closed down, for the ones who have survived and who have just kind of like stuck it out throughout this difficult period. Now kind of like, we find that we are fully booked quite often, just because there's, less kind of guest houses there, but the demand is growing and is picking up again. I totally agree with you to not always kind of listen to the media and kind of have kind of perceptions about something, because quite often reality is different from those perceptions. But I also just want to ask you, you've mentioned now about multi-lets, and maybe you should first, just for the people who are not familiar with the concept, just maybe explain the concept multi-lets to us. And then also for people who are at a point in their investment career now where they say, but I want to get into it, what are the things that you should know before you get into something like multi-lets?
Okay. So multi-let is kind of a few different versions of it and what we call over here. So, but essentially it's having either multiple units or multiple rooms that you're renting out. So on the multiple room side, it's a typical kind of thing as a student accommodation, or you're renting a room in a house, like in a commune kind of environment, or it's actually a property that's been carved up into, let's say, 3 different units on the same property. And that's the definition really of a multi-let. It's kind of one property that has multiple tenants on board with it. There is a challenge with getting all the finance around that. Banks do not like it at all. And you have to be, let's just say, very strategic in how you apply for your financing. And also very cautious around that as well. You don't want to break the law or the rules, but you want to make sure you stay right within those boundaries, but know the rules of the game. So for those getting into it, you can expect a lot more time and a lot more hands-on in a multi-let. Of course, there's more people and there's more challenges that are going to happen. There's challenges like the one person's not going to like the other person. The one neighbor's not going to like the other neighbor. There's going to be challenges around electricity and water consumption and how you divide it all up in a multi-let. And it costs you a bit more money around that because, especially in a commune environment, you want to get meters into everyone's rooms and you want to look at more affordable technologies. So meters in rooms is a great idea because then everyone's responsible for their room. If you don't have a meter in the room, you all collectively put in, but then someone says, yeah, but he's using this and he's using that. To put meters in rooms, that's the first thing that I would do. In terms of the kitchen, go straight to gas, have multiple cookers where people can get their own gas, and then they know, okay, fine, I've got my gas cooker over here. Look at technology in terms of solar. It does cost more to get solar in initially, but the payback period on a multi-let is pretty quick when you do that. Water tanks. Get water tanks on your property. Get the plumbing. Get a certified plumber here, not a guy around the corner, because there are laws around the plumbing around this. Get your toilets onto a JoJo tank as quick as you can. At around 14 liters of flush, and if you've got 6 students or 6 people in a commune, just on flushing toilets, you're going to blow through that 6,000 liters in a month in no time, and your water bill will go sky high. Solar panels again, for running through the day. You don't need a battery bank and the inverter. Those are the most expensive things to have, but you can run most of your electricity in the day then on these solar panels. That's great. Pave your garden. Get rid of all the grass, unfortunately. It's lovely to have trees and bush, but trust me on this, it's going to die. People are not going to look after it. That is crucial. Next crucial thing, speak to your neighbors. Get to know them very well. Tell them what you're doing. Let them know if they have any challenges. They can contact you. Give them their WhatsApp number. A lot of people are afraid to do this for some reason. I'm like, no, get in there and get to know your neighbors, because they're going to tell you if the guys are having a massive party in your house. So it's those kind of things that you want to do. Put in noise recorders. It just records a noise level. And as soon as it goes above a certain decibel, it'll ping you on your phone. And you can go, okay, fine, let me just call up the house. And that kind of gets quicker response times in terms of going, hey guys, you guys are making a noise, before the neighbors complain. If the neighbors complain too much, then you have too many challenges. So those are the kind of tips and tricks I would say. Tips and tricks. Always a funny way of describing it. Strategies for getting into multi-lets and running them more efficiently. Last little trick, make sure you have an external meter counter on your circuit breakers. People will always try to circumvent that little meter in there. Make sure you get the Wi-Fi controller as well. Spend extra money on that, because they will try and bypass it. Just those are the tips and tricks I would say for getting into multi-lets. And I would say, if you want to get into a multi-let, do what we did. Go and find somebody who's done it, partner with them. We invest into people and we partner with them, watch what they did, and went, great, I've got it. So I've learned what I need to learn in a much more risk-free environment.
Yeah, I absolutely love what you're saying now, because I think that actually proves our point, that what we said right at the beginning in terms of partnering up with somebody who has done this before. Because now when you were explaining it, you could hear that is obviously coming from a point of experience. You've been through it, you've struggled with it, you've made the mistakes, you paid the price. And now you have that knowledge. And I think then for somebody to come in and already kind of leverage from that kind of knowledge, you can just save so much money and trouble just by kind of like getting that knowledge somewhere, as opposed to try and spend 5 years gaining that knowledge. But I think
one of my coaches said to me, if you want to go fast, go alone. But if you want to go far, go with a team. And the first few years, I didn't listen to him. And I look back now and I realize how right he was.
That's so true. And I think when I went onto your website, something that was quite interesting to me, because I think most property investors, or when you read up about property investing, you always hear the term cash flow positive. But there you also talk about equity positive. And I think that is something that's not that kind of familiar kind of within the property investment space. So maybe you can just talk to us kind of what's the difference between the two, and how would an investor typically achieve that?
So, like many investors and people who start in property, I did the traditional mistake of going, any property will work. And that was kind of my first mistake. I read Rich Dad, Poor Dad, as a lot of people have and do. And I thought, okay, I've read the book, I know what I'm doing. I went out and bought the property. And then 14,000 euros in 1 month later down was a hard learning lesson. But I then went on a journey to learn. And I probably spent, well over 200,000-300,000 rand so far on coaching and on education to understand what cash flow positive really is and what equity positive really is. Cash flow positive is, at the end of the month, do you have more money in your account than the expenses? So more income than expenses. It is something critical that people do not put into their expenses. And those are the things that you need to take into account. Everyone goes, okay, well, I've got water, lights, electricity, garden, rates, taxes, the traditional ones. But what they don't take into account is vacancy, voids, maintenance, annual financial statements you need to do for your company, the accounting, the banking costs, the marketing costs. All of those costs need to come in to your expenses. And if you're not including them, you're not seeing whether or not it's going to be cash flow positive or not. Because if you go, I've got a rent of 10,000 Rand and my expenses are 6,000 on the traditional numbers, you're going to be breaking even, because pretty soon you're going to be adding, someone's going to be leaving early, you're going to have a void. Then you have to remarket. Then you have to get someone else and you have to run tenant checks on them. Then your accountant is going to come and go, your annual financial statements are due, and you'll see you're up at 10, 11, 12,000 almost. You need to budget for those costs. So that is in cash flow positive. Income way exceeds, and my number is 1.6. So if I'm getting 16,000 Rand rent a month, I need to know that maximum is around about 10,000. So 1.6 is my magic number. Then I start looking at it. When we come to equity positive, this is a critical one, because any property you buy and that you want to buy, you need to have 2, preferably 3 exit strategies. And it's important because things will go wrong. I'm harping on the negative here, but it will go wrong. And we plan for that, and you have to. Whatever reason will go wrong, you have to be able to buy below market value. So if the property is worth 1 million Rand, we ideally want to be getting it for about 800,000 Rand. And the reason for that is when things go wrong, you want to be able to sell it and not make a loss. It's critically important that if anything happens in the economy and you do want to sell it, if anything happens in the area and you do want to sell it, that you can do so. And I'll give an example of property I bought in Pretoria a few years ago. I bought it for 1.1 million. It was worth 1.6 million. So that's a deep, deep discount. Now, everyone thinks they can just go out there and buy these properties, and they're not just out there to buy those kind of properties. As a property investor, a professional property investor, you have to go looking for people's problems. You have to go, how can I help people? How can I service people? This particular property, the lady couldn't afford to sell because of the fact that the estate agent fees was on there. She had her car taken away by a loan shark, and she had rates and taxes to the tune of 72,000 Rand. Her landlord had a worker locked her out of her business. It all just kind of snowballed, and she got to that point. And I said, okay, well, I can take your property, but it only makes sense to me at this number down here, which is a lot lower. But what I can do is I can pay off your loan shark to get your car back. And I'll speak to your landlord and let him know I'm buying this property. And when the sale comes through, you can pay your landlord the back rates and taxes. And I'll speak to Shwani and I'll get them to hold off while I do buy it. So I took all of her challenges, and she had about 7 challenges, which I had to solve. Spoke to all of these people, and because of that, I was able to get that deep discount. And that is great, because if anything happened, I knew I could resell it on again and I wouldn't make a loss. She was thrilled because I took away all of her problems. She didn't need all the money. She wanted to get rid of the headaches. That was the stress she was under. Banks threatened to kick her out. Car repossession companies saying, we're going to sell your car now, it's done. Not being able to work. Can't get her kids to school because she hasn't got a car now. Those are real life problems that if you go out to solve the problem, you're able to go, fine, but I take on those risks of all of those financial responsibilities, but I got to get this property at the right price. And that's what we call equity positive properties.
Okay, so it is to almost explain it in a way that it is actually to buy a property for an amount lower than what its market value is. So you obviously gain some equity immediately, because if you have a bond up to a certain amount, your property is worth more than that, and that is where your almost gap or your equity portion comes in.
Absolutely, yes.
Yeah.
And generally, you always want to make sure you've got that. And again, the one reason is you solve the problems. Is a prime example of how you can get those kind of discounts. And a lot of ours that come through is we're able to buy now. So people come to us and they go, I've got to sell today. I'm like, great, I can buy it today. This is the price that I can pay you. This is where the numbers make sense. I'll show you the numbers. You can read them all. That is how you get those discounts with people. People will take a discount to solve their problems. if you can solve the problem for them, not the perceived problem. The other way which you can buy at a discount as well is to actually force the value. So this is where you're going to take a property and you have a look at it. And traditional properties on the, say in Joburg, in the southern parts of Joburg, there's a lot of big plots of land still there. And you've got these houses with like 3 bedrooms, 1 bathroom, and an old kitchen. Now I know immediately, like, okay, I could buy close to market value. And all I got to do is put an extra bathroom in and refix the kitchen. Now I've got a 3-bed, 2-bathroom. And it's an ensuite. So it immediately forces the value up. That's the other way of doing it. So that I'm now equity positive from spending, say, 100,000 Rand at most. I'm putting in a magnificent kitchen, depending on the size of it, and another 100,000 Rand in the bathroom. I've increased the property value 300,000-400,000. So when I go to sell, I can make a profit out of it.
Okay, that's an awesome tip and trick. So I like that one. And I obviously like the numbers. And I think that is so important for people before they invest to really run the numbers and make sure the numbers make sense. And apart from what you've already now explained to us with the cash flow positive, equity positive, what are the other financial indicators that investors typically need to consider?
Okay, if you ask me, it'll be short. If you ask my partners, it'll be long. My partners, again, are a lot of the people that I work with and partner with are these Lord mechanics and profiles, and they love numbers. They are risk averse to the nth degree. So they look at things like operating expense ratio, return on equity, how hard is our money working for us, internal rates of return, debt service cover ratios, payback period, loan to values. They look at all of that. And it's one of the benefits why I like partnering with people. Mm-hmm. For me, it's around 2 things and 2 things only before I'll look into the numbers before I give it to my partners to deep dive into it. And that is cash flow and return of investment. The cash flow is, am I getting paid? And the return on investment is, how quickly will I get paid to actually pay back my investors who join us? Mm-hmm. And if you've got those 2 numbers looking strong, all the other numbers will naturally become strong with it. Debt service covers ratios are great numbers to have. The banks, especially like the likes of Tough, who invest into inner city properties, they love a debt service cover ratio of covering my debt by 1.3 times more on the income versus the expense. Payback period is another favorite of mine because it tells me, okay, this is how much cash flow I'm making, this is my return on my investment, therefore I'll make my money back in this many months. Which means when I'm approaching an investor, I can go, here's all the extra income we're earning, which is going to go back to you. Therefore, it's paying you back in 24 months, whatever it is. And you can see it quite clearly. So my big 2, cash flow and ROI.
Okay. No, I totally agree with that. But I think then also something that a lot of people are uncertain about is in terms of, should you buy a property in your personal name or should you buy it in a company? And what are the pros and the cons to those 2 options?
Sure. Yeah. Now you're going into the big stuff. Okay. So 3 possibilities: buy in your own name, buy in a company name, or buy in a trust, or buy in a combination of those. Mm-hmm. So here's the big one, the big nugget that people don't realize. When you buy in your personal name, let's just say you can afford R1 million mortgage. So you go to your mortgage originator and you say, Mr. Mortgage Originator, I want to get a bond. How much is everyone going to give me? And he runs around and he speaks to all the banks and everyone else. And he goes, cool, Mike, you can afford R1 million. I'm like, okay, great. If I buy a property in my own personal name, I can only buy 1 property for R1 million. Then I'm done. Then the banks are like, you're done, we're not lending you anymore. And that's because of the National Credit Act. And it basically says you can't lend more than someone can afford. And that's because of what happened overseas, where they just lent people money after money after money. And then one day the 1 property went bankrupt and then the whole house of cards fell down with it. So a con of buying your own name is you can only afford 1. A pro of buying in your own name is the fact that you have a 2 million Rand, I think it is, in terms of capital gains tax. You don't pay capital gains tax immediately. Great for fix and flippers. Great for people who want to take the strategy of, I'm going to find this property. I'm going to move into it. I'm going to live in it whilst I build the bathroom and do the kitchen, and I'm going to paint, and I'm going to build the garden, and I'm going to build a lapa, and I'm going to do all of this stuff. And at the end of the year, I'm going to sell it, because then you don't get any capital gains tax. And that's a great strategy. And a lot of people do that. They buy one house a year, live in it for a while, fix it up, flip it, and sell it on. Not so great if you want to own more than one property. This is where the trust and the PTY come into being. I can open up a company. I can buy a property in it for 1 million rand. Cool, I've got that property and I can rent it out. But now I can go back and I can go, I want to buy a second property for 1 million rand. And the bank says, okay, well, how much is your loan? I'm like, me? Nothing. The company? 1 million rand. I stand personal surety on it, but it's not in my name, it's in the company's name. And they go, okay, fine, you can have another 1 million rand. And then you go to about 3 or 4 down the line and they go, well, hang on a second now, Mike. Listen, your personal affordability is 1 million rand, but you bought 4 of these. I'm out, We're not giving you any more in this company. That's it, I'm done. I'm like, okay, fine. Then I go to Standard Bank and I say, Mr. Standard Bank, I'd like to buy another property for 1 million rand. And they go, okay, cool, let's have a look. Yep, you don't have a bond from us. We've got no risk with you. You can see you're an experienced investor. We'll give you another one. And you can go 5, 6, 7 with them. And then you go to Nedbank and just FNB and you keep going that way. Until finally all the banks go, you know what? No more. We're not lending you anymore. I'm like, okay, fine, got you. I'm opening up a new company. And I open up a new company. And I go, I want 1 million rand mortgage in here. And they go, well, there's nothing in this company. There's no risk in this company. Sure, we'll give you the money. And it goes on like that. Now, it's not quite as simple as what I'm explaining. There are certain criteria within all of that, but that is the essence. Is a pro of buying a company or a trust is you can afford multiple properties because you're not limited by your personal affordability, by your one personal affordability, because a company isn't restricted by the National Credit Act. The person is, but I can stand surety into a company. Negative of buying a company, of course, complexity. You're going to have accounting, annual financial statements, same as a trust. There's a lot of administration that goes into a company. You're going to have to have a bank account that goes, and you have to have all these fees and accounts, and it is a lot of work putting into a company. So you've got to make sure that the property also pays for all of these ancillary services that are required. But the pro, of course, is you can buy multiple properties over time. A trust. So here's what I do. If I'm going to buy a trust myself, if I'm going to buy a property myself, I own it in a trust. And there's a benefit of that is because I can disperse profits out of that to my beneficiaries, which is great if you've got kids, especially people who've got kids, because now you can actually start paying for your kids' school fees for that trust. And it's all tax-free then, because you've taken this money out of the trust. It's paying for something. The kids under 18 don't pay the tax, and they're below that threshold. So you get a lot of your expense, your personal expenses as a human being removed, and it's tax-free. So I buy personal, myself, if I'm only the one in a trust. If I'm buying with a partner, my trust owns the company owns the property. And there's a specific reason for that, and that is creditors. So they want to go after a warm body if something happens. Let's say they want to sue you. They come along, they go to the company, and they go, well, who's the directors? Or who's the shareholder, who owns this company? Okay, well, it's the trust. And they got to stop there because a trust is administered. You can't own a trust. You can only administer a trust. I'm a trustee to a trust. And so the warm body stops there, so they can never take it away because the trust owns the company owns the property. There's no one individual you can go after. And so what happens now, another benefit of a trust in addition to that is estate planning. So if you've got kids, and the trust owns the company which owns the property, when you pass away and pass along, it's like state duty, there's no stopping of the service. It continues. When you pass away in your own name, you've got the company or property in your own name, they kind of freeze the assets for a few months. And you've got to make sure when you get to a certain age, you plan for that. Because they'll just block it whilst they work as like this whole kind of system. But in a trust and a PTY, it still goes on and on and on and on. It can go on for generations. The beneficiaries or trustees will just take over again of that trust, which owns the company, which owns the property. So there's a few pros and cons, but it's a lot more in depth than that. That's very high level.
Yeah, no, and I think that is excellent advice. And I think that almost talk to my next question, where I want to ask you specifically about funding and money, because I think that is, for most people, we would love to get into property investment, but that is, and it's maybe again what we talked about earlier, perception. But that kind of like, I'm not going to get funding, or where can I get money to buy a property? I would love to do that. So maybe you can just tell us a little bit, what are those things that you need to know, and what are kind of good tips for you to actually get into property investing and kind of like can overcome that funding hurdle.
Indeed. And there are two challenges in property. One is find the property, and the other one's find the money. That's how it goes. And there's stages where we've had too many properties and not enough funders. And then we've had the opposite, like everyone's screaming and going, here's the money, and go, I don't have any property for you right now. Like, you don't buy every single property out there. We're very specific. So we work on the model that we get the banks to fund our properties on the purchase, and we work with investors to fund the acquisition costs or the refurb costs or whatever other ancillary costs that come in and buy the property. Up until recently, banks have given us 100% in both a trust and a company, but now they're tightening down. They've realized the curve is coming back up again. It is going to go back up in interest rates, and so banks are getting a little bit tighter. So on the institutional lending side, there's a couple of things you need to know. So banks work on kind of three legs: the horse, the course, and the jockey. That's my analogy I've developed, and I may just have to patent it someday around that. First one is the horse, which is the property. If the property is worth $1 million and you're buying it for 1.2 million, you're not going to get a 100% mortgage. So you have to understand what the property is worth, and we have Lightstone reports for that to calculate what the area averages, etc. And they do a desktop analysis. If the property is worth $1 million, you're getting for 800,000. There's a very strong likelihood on the horse side they're going to go, we'll give you a 100% mortgage. That's the one kind of pillar. The other pillar is the course. They want to know, what are you using this property for? And so if you tell them you're using it for student accommodation, you're going to get pretty much a fat no, we're not going to lend it to you. If you're doing it on a commune, they will allow a commune within certain regulations, and you have to make sure within what they're stating that you do comply with that. So you've got to be very specific and careful around what it is you're telling the bank specifically going to use it for. They will fund investment properties. And if you can prove and say, well, look, I'm buying this property for R1 million, and let's just say it's 10%, 10,000 Rand a month is going to go to the mortgage, and 6,000 Rand a month is going to go to all the other expenses, and I'm getting 18,000 Rand a month rental. ABSA will look at future rental. The other banks won't. FNB is kind of starting to get there, but ABSA definitely will. So that's the course. And you want to make sure you can paint a picture to the bank explaining what this property is going to do for you. How's it going to help you, and how's it going to help them? Because they want to make sure they're getting their money back. That's the second leg. And the third leg is then the jockey, which is us. And so you want to check out your credit record. That's the first thing. Get that credit record up there. Get it stellar. I specifically have a strategy that I use on nearly a monthly basis to make sure my credit score stays up there. And there's a lot of little tricks, tricks and strategies you can use. Once you understand what the bank likes, they like to lend money. You can use that to your advantage. So credit cards, or as I call them, investment cards. People don't like credit cards, but if you buy a property with that turns more money than what the credits cost me on the credit card, it's an investment card. I know that banks don't like a 70 to 80% of my credit card being used. So if I've got 100,000 Rand limit on the credit card, if I'm regularly spending 80, 90,000 Rand on the credit card, when the time comes to borrow, get a mortgage, they're not going to like me. But I do know that between 50 and 70% is a sweet spot. And they like that because I'm constantly using their money, and I'm constantly giving them money. I'm paying it back on a monthly basis. Everything's going sweet. They also don't like too high a credit limit. So I know this. I'm like, okay, fine. I'm going to go, hey, ABSA, give me more on my credit card. Give me more every single month. Give me more, give me more, give me more. I'm going to get 500,000 Rand on my credit card. Fantastic. They're going, oh, that's a lot of money. And I'll spend up to 300,000, then it'll drop back down again. 200,000, then drop back down again. I'm using big numbers here, but it can work equally well at a 10,000 Rand credit limit. And then 3 months before I know I'm going to buy this property, or as I buy this property right now, I know I've got 3 months to transfer, I drop my credit limit down. ABSA, drop my credit down to 50,000 Rand. I'm like, okay, fine. So when they run the report and they go, what's your credit, like, what's it called? Credit sheet or whatever it is. They go, oh, he's only got 50,000 Rand availability on his credit. That's fine. But if they'd seen the 500,000 rand, they were going to hang on a second now. He can get himself in serious trouble here. So there's another little strategy you can use. The other strategy is kind of getting your credit score up. Is you have to go on credit to get credit. I came back to South Africa in 2016. I spent 17 years working and traveling abroad, and I came back and I was going to buy a property, and they were like, "No, you're not. No, you're not." I'm like, "Why not? You don't have any credit record." I know. I just bought my bike with cash. I just saved it up, and I bought the phone with cash. That's a responsible person. No, that's not a responsible person. The responsible person gets in debt. I'm like, how does that logic work for you, Mr. Bank? They want to see a credit history. So I went out and it was ridiculous. I had to get a 9 Rand SIM, I think it was at the time, 9 Rand a month. And I said, cool, I want to take it at 9 Rand a month because I want to build a credit record. And they said, no, you've got no credit record, Vodafone, Vodacom. I was like, okay, well, fine. Here's $120. I'll pay for it, but just take it over the year. No, we can't do that. I'm like, oh my goodness, how am I going to do this? So it took me a while to actually realize that I had to open up an Edgar's account, spend on it, pay it over 3 months, watch what it did to my credit score, do it again. When it went up enough, I went back to Vodafone to get the 9 Rand 99 Rand a SIM month, which built up my credit score even more. And then I just carried on doing this and realizing what the banks want. Then I went and got myself a credit card. And there's only 2,500 they'd give me initially. That was it. I'm like, oh, well. And again, I knew the limits of what I had to do. And over time, it went up, and I'm at 870 something right now. And I keep it in that region on the TransUnion. So go and check your credit score out. I have mine also. Loved and they love to have TransUnion. I pay 99 Rand a month, and I get pings whenever someone runs a credit check or whenever someone does something with my ID. I get pings. Now banks look at that and they go, that's a responsible person, because if he's not going to be, ripped off or scammed or anything else. So understand what it is they want and play their game. I remember the first mortgage I got after all of that was at prime plus 2.5%. I was like thrilled that I could actually get it. Nowadays, I'm like prime plus is already for me a no. Like, I want prime minus, and I'll argue with the banks. I'll tell them straight, I'm not taking your prime. Give me prime -1, or I'm going somewhere else. I'm taking all my mortgages with you. So those are the kind of things that you need to understand when going through all that financing on the institutional side. And it's a game. Treat it as a game. Treat it as fun when they call you up and say, we're not giving it to you. I'm like, well, then I'm just going to go and close my account with you. Treat it as a game when you go onto social media and tell them, I can't believe my own bank wouldn't give me prime. And I've been on them for years. I do it. I'm not no scam about it now. They have no scam about prime plus 2.5. So sorry, I'm being friends with them. On the private money lender side, and that's what we do, we work with investors, you have to build trust. And that comes through experience, it comes through education, it comes through awareness, it comes through showing what you do. And that's what we do. We regularly put up pictures of showing what we do. We show past investors. We've got them speaking and saying, hey, contact our previous investors. We pay them their money back and more. And you need to build up that reputation. And the easiest way to do it is to start, great little tip here, start with Bank of Dad, BOD. Bank of Dad is great. Even if you just borrow 10,000 Rand from them and repay them back within a year, that is still a reference. Then start with your cousins, start with your friends. And once you build up that little inner circle of people you've invested with and will now give you testimonials that you repaid them back, you can give it to other investors. So now it's a friend of a friend. And you can say, oh, I'll speak to this guy because he borrowed. Once you've got a friend of a friend, then, you advertise and then it's saying, we will give 15% interest. Someone's going, that's great, but how do I know you guys are real? I will speak to these guys, speak to her, speak to him. Be strategic in how you approach it as well. Once you've branched out of the family, you need to understand that there's different cultures out there, and cultures will trust their own culture. So look for people of different cultures and go, come and invest with us so that they can also spread the word further afield. And that's what we've done now is we're breaking into multiple different cultures. We've got down in Cape Town, Sajida, I mentioned earlier, Muslim. So she can't take interest. So then I worked out, I go, okay, well, if you can't take interest, can I coach you? Because I do property coaching as well. She said, yes. So now I'm coaching her on how to do it. So there's different ways to get investors on board with you. Offer them something, solve their problem again, find something of value to them and offer it to them.
Those are great tips. And I think it just again proved that your little story about your 9 rand sim, that there is actually a way to solve any problem. You just need to find the solution or the way to solve that problem. But I think you have touched on it now, but probably what a lot of people would also say is, I mean, there's been so many scammers around, and especially now during this lockdown period. But how would people know if I now say, no, I don't want to invest in a property myself. I rather want to come to you guys. How would I know you are legitimate and you are not going to run away with my money?
Yeah, and there's a big one now in KwaZulu-Natal with a guy who took millions. It's horrendous, and it was so weird. So I'm trying to remember which deal it was now. Can't remember which deal it was. Anyway, so we did the property pitch. We presented it online. We plastered all over the social media, and this guy called up and said, "Listen, I'm in. Like, send me your bank details. I'm sending you my money." I was like, "No, you're not. Like, you're not sending me your money without doing your checks." And he kind of went, "What?" I was like, "You need to check us out. I don't know who you are, and you don't know who I am. Just because you saw me on social media or TV or one of the radios or in one of the newspapers." That was it. Sorry, it came from the Mail and Guardian. So I was in the Mail and Guardian. I had a big kind of thing on there, doing some stuff for them. And he saw the advert, and then he came to the deal pitch presentation, and then literally offered us, I think it was 175,000 rands. Like, just send me your bank details. I'm sending it right now. So the first thing that's important is, like, and I mentioned it earlier, go and check the people you're working with. Please, please, please. Like, don't just do basic due diligence. Speak to people who they know. Speak to people who commented on their Facebook post. So, and I did it when I started investing. I would go and go, I'm interested in learning this new strategy, and these guys do that new strategy. Let me go follow them and check them out on Facebook, and then I'd see who's commenting. And then I'd go and just start a DM with them and just start chatting to them and going, "Well, have you invested with them?" And they're like, "No." I'm like, "Okay, well then you just who are you? You're not really anyone who's really going to give me value." But over time, I got to chat to a few different people, and they're saying, "Yeah, we have invested with them, yes, and this is what happened. We got all our money back, and this is what I learned." And I was like, "Okay, great." So that's one way of checking it out. Second thing is, you want to make sure there's proper, say, company documents in place. Ask to see their MOIs and their MOUs and their shareholders agreement and their SIP-C registrations. Ask to see those financial documents, their annual financial statements. If they haven't got that, chances are they're not a legitimate company. So for us, we use a guy called Yaku, who's a brilliant guy, accountant. That's all our annual financial statements and our audits and everything else like that. That's the kind of guy you go, "Well, who's your accountant? I want to go speak to him." Speak to their accountant. If the accountant's going, "Okay, not too well," then because the accountants don't generally lie. They're a registered body, especially an auditor, and you'll see they've got to go through a lot of referrals around that. Lawyers, speak to their lawyers. I've got our conveyancers on speed dial almost. They're a company, do a lot of conveyancing. Call them up and say, "Do you work with this guy? What's it like? What's your working relationship like?" Vet them that way. Vet them from previous investors, existing partners, people who follow them on their social media. Go and stalk them. If you see a guy's only been doing this on social media for the last 6 months, there's your sign. You'll go on hours if it goes back years, and you will see people on there for years and years. Go and find out this other chick with I've got it on mine now, and I did it. So I learned this trick. They were talking about these properties they had. I'm like, "Okay, cool." So I went it up and I searched the property details, and I managed to get hold of the property details, and then went to find out who the tenants are. I called the tenants up. And they're like, yeah, we've been living here for the last 2-3 years. "Yeah, no, I know, Matt, and whoever, it's fine." Okay, great. Now I know that their tenants are saying good stuff about them. There's a good chance that he's going to be legit. So yeah, that is the kind of tips and strategies that I've used for mine to try and I've called people out as well. You just go, "Hey, dude, you've got no experience, no education. Ask to see the diplomas." If you can start saying, "I'm the big it," well, cool. Let's see what you got. You want to see my master's in business administration? Cool, here it is. I put it on my website even. There's my degree. I even put the attestation, the photo on the back, and go contact the British Embassy. They'll tell you I've got a legitimate master's. Find find something where someone's not legit in one thing, the chances are they're not going to be legit in another thing.
That's true. And I think it is so important for people these days to really, do the due diligence, get the knowledge, don't just take risks, do your homework before you invest. And that's not only for property, that goes for any type of investment out there. But I think, Michael, you have shared so many tips and golden nuggets today with us. Maybe we should just end off with the last question. And I think if you basically consider all of your experience over the years and your journey where you started off to where you are today, if you have to give some advice to somebody who wants to start out investing in property, or maybe have one property and want to get into a second or a third property, what would be your best advice that you can give to another investor?
Sure. Which one? Let me think about that. What comes from my gut right now, I'm very much a person who reacts from his gut, and my gut is my combination of my experience and my education. What comes from my gut right now is to do it. And Elon Musk says it best, fail forward and fail fast. We're gonna make mistakes. Learn to embrace the fact that you're gonna make the mistake and it's gonna be okay and you will recover. The quicker you do it and the quicker you learn those mistakes, the quicker you can start making money. What stops me from doing a lot of things, and I've got to catch myself doing it, is going, but what if I fail? What if I do this? And I've gone to that point in my life and I'm going, well, it's going to happen, Mike. You've got a lot of experience, but even you don't know anything. There's no way. I've got 10 people on our team now with vast amounts of experience. I'm going, but maybe they'll catch it. I'm like, no, even they will sometimes miss something. But we know that when we do, our greatest strength is not in knowing everything, but knowing we can figure it out. And it's just the starting that actually is the biggest hurdle in property investing. Everyone thinks it's because they don't know anything. It's not. It's the starting and the failing quickly. And there's shortcuts around failing quickly, like we say, and that's why we do it, is that earn and learn. Come and invest with us and ride along with us, or buy cheaper properties, or start with that, invest into REITs if you have to, or investment funds or stock funds, whatever it's going to be, but just start. The people who sit back on the sidelines and don't start, the people who sit back 20 years later and said, I wish I had. And that for me would be my biggest failure, if I'd said I wish I had. Even that property that I lost 14,000 euros in 1 month now is 112,000 euros in equity positive, and I receive 9,000 Rand a month in rental income from it. Profit, pure profit. So I learned to adapt, and it was a slap and a half when it happened. I can tell you, my ego was broken. I was broken. At that point when you're on a floor and you're actually sobbing, you're literally like, what have I done? I've screwed my whole life up. And it taught me so much. But I look back now, I laugh at myself. I was literally in the kitchen crying. But now I look at it, and that's my biggest thing, is we can figure it out. We can start.
That's true. I absolutely love that advice. And Michael, I really want to thank you for spending some time with us today and just sharing all of your wisdom, all of your knowledge, everything that you basically learned over the years, and that make you a better property investor today. So thank you for your willingness to share that with the viewers. And for the viewers, I am going to share Michael's details in the description below. So go to his website, go read up, contact him. Like he said, he's got different options where he can either coach you or where you can invest with him and basically go on an educational journey with him to really learn all of those small things that will make a big difference in how you experience your investment journey. So please go to his website, contact him. And like he said, the most important thing is just to take that initial step, get into it, And don't only worry about that thing that can go wrong. Think about the one thing that can actually go right, and that one positive thing that can change your life forever. So again, thank you for all the viewers watching this. I hope you have received a lot of value. Please go to the comments, and if you have any questions, we will definitely be responding to your questions. Remember to subscribe to the channel and to enter the competition to win one of my books, Financially Fit and Wealthy. Thank you, and then we will see you again at the next Ronel Talks Money show.